Yo, what's going on, guys? It's your boy Mac, and welcome back to another video. So in this video, we're going to be going over a Bitcoin trade that took place this past weekend. And not only was I able to catch it, but some of my students also contacted me and told me that they caught it without me even having to call out the trade. So this is what I mean, guys. Once you have the information, you'll be able to take that information and apply it to whatever asset class you want to on your own time, right? As you guys know, I do trade GBP USD, Bitcoin, gold, AUD USD, Euro USD, and a couple of other assets, US30, right? But if you would like to trade other assets outside of my personal class of assets, you can, all on your own with the information that you will learn in the mentorship program and by purchasing the course, right? So let's go ahead and hop into the breakdown. If you are not subscribed to this YouTube channel, feel free to go ahead and subscribe. I would love to have you a part of the family. If you haven't left a like on this video, feel free to leave a like before we get into it. And with that being said, let's go ahead and roll the intro and hop right into it. Catch you guys on the other side. So as you guys know, my higher time frame long-term target for Bitcoin, which should be hit pretty quickly, is going to be that 25,000 price level. Now on some servers, 25,000 has already been hit. However, I go based on Coinbase servers since that's where most of my crypto is purchased, and then I move it over to cold storage. So right now I just use Coinbase as my server of choice, but you guys can feel free to use any server of choice that you want. So ever since price was at $68,000 for Bitcoin, you guys know I've been calling out 25,000. If you do not follow me on Twitter, follow me on Twitter, okay? Because on Twitter, that's usually where I drop all of my crypto type of trades and things like that as it relates to Bitcoin, Ethereum, and XRP, right? So we are still looking for the 25,000 to get hit, and after that, I will be dropping the other levels that I'm expecting to get hit and when on my Twitter account. So feel free to follow me on Twitter at TrillionaireMac. We are going to change my Twitter name to just Mac or something like that, but it's not available right now. So feel free to just follow me at TrillionaireMac, 2 L's, okay? So let's go ahead and break this area down. So the buy position that I took was actually counter trend, right? We had this nice push to the downside here after we had these relatively equal lower highs, right? We see that price pushes to the downside, and then we have a nice retracement back up into the premium level for us to go ahead and start to collect more sells to possibly close this imbalance down here within this region, right? So looking for buy positions is definitely counter trend. However, we can take advantage of internal structure. Sorry about that, guys. However, we can take advantage of internal structure and look for possible buy opportunities if they form. Now, there's a certain way that I take counter trend trades, okay? I don't always follow the rules that you guys are used to when it comes to taking counter trend trades. And mainly the rule that I don't follow is going to be that target rule, right? So those of you guys who know how I set my targets, right? On YouTube, it may seem like we just set targets on highs and lows, but there's an actual science behind why we set our targets where we set them. So definitely keep that in mind. So in this case here, as you guys can see, I didn't necessarily target any high or low, and that's because when it comes to counter trend trading, okay, I do switch things up just slightly just to make sure that we're on the good side of things. All right, now students of mine, you guys already know exactly how I do so, and if you're on YouTube and you're wondering how I do so, of course, always feel free to ask me in the comments below. I don't mind answering you all's questions at all. So within this area, if we're just looking at structure, we can see that we have our counter trend structure starting to be created here. So this was our high coming off of this low for counter trend, taking out this high here. Then we have our higher low, higher high, right? So this is a strong substructure low, okay? Demand area. So we have to keep that in mind. So when price trades into this once and then twice, and we finally have that 50% mitigation, that is when I was looking for a possible trade opportunity within this region here. So let's actually go down to the M15 and let's see what's going on. Now, before we go down to the M15, let's actually look at the H1 time frame really quickly. Now, before we go down to the M15, let's actually look at the H1 time frame really quickly, just to get a little bit of information on what's going on. So we can see here, price taps into this H4 point of interest that you guys saw on the H4 time frame. Okay, and we do have somewhat of a transition. Now let's see if it was a daily point of interest. Okay, it doesn't look like it was a daily point of interest unless we're just going based off of this wick. Actually, yes, this is a daily point of interest. We could use this wick, sweeping this liquidity, and then breaking structure to the upside. So we do have a daily point of interest, which we can see a little better on the H4, which is here, and we can see really well on the H1. Okay, so understanding that we have a daily point of interest, if we see an H1 type of switch of momentum, okay, that is definitely something that I'm looking to take advantage of, and we can see that takes place here. So we have a transition of momentum here. Right? Then we have multiple points of interest that are created within this area. Now, let's go down to the M15 so I can show you all where I had my refinements. All right, so now that we're down on the M15, so I did have a point of interest here, but as you guys can see, price literally blows through that point of interest, no reaction, so I just took it off. And then my second point of interest that I was looking for price to possibly interact with was going to be this region right here. All right, we can see that this region here is responsible for taking out this structure here. All right, but most importantly, we took out this structure here, which was a possible flip, and price definitely reacted here. So let me just break down what I'm saying. Okay, so we can see that we do have some type of interaction with demand here. All right, so let's find that demand that price is interacting with. And guys, this is literally how the mentorship program is, or very similar, except, you know, usually I am dropping gems all the way through. I'm trying to be careful what I say on YouTube because I have students who pay for this type of information. So we can see that we have some type of demand that comes into the market here that takes out whatever supply is here and takes out this structure. Price then taps into this demand. We have one failed reaction here. Then we have a second failed reaction. Supply comes into the market here that is responsible for taking out this structure and this demand as well, right? So this is a very, very important region. It's confirmed that it is an important region once price actually interacts with this area and creates a failed reaction. Now, what is responsible for taking out this failed reaction here? Well, it was the demand that came into the market here that caused this push to the upside, right? So that is exactly why this region here is my point of interest. Now, it may sound complicated, but if it sounds complicated to you, what I just explained, it's only because you don't have your hands on the necessary information to actually understand what's going on here. But what's going on here happens literally every day, every single pair, every single asset class, over and over and over again, right? That is exactly why we're able to catch these types of trades. That's why we're able to produce the results we produce, because everything that I just went over, my students understand to the T, as well as a couple of other things that we didn't necessarily discuss, but students of mine, I know you guys can see it taking place within this region. So when price taps into this area here, right now, it is always best to take your entries during New York session. However, when it comes to cryptocurrency, I don't always follow that rule. Okay, that rule is mainly for US 30, as well as a couple of other asset classes. Gold, I also don't necessarily follow that rule, as you guys know, unless we're just day trading gold. But if we're higher time frame trading gold, I do also trade it within other sessions. All right. So when price taps into this region here, okay, my instinct was to go down to the M1 time frame to see how price is going to react to this area. So let's actually do that now. Perfect. So now that we're on the M1 time frame, this is the region that we can see price has mitigated our M15 POI, but let's first just track price and see what's actually going on. So how I decided to take advantage, okay, first tracking structure. So we can see we have this high here, we can see we have this low, we have this lower high, then we have this sweep here, lower low, and then nice move to the upside being our higher high. Right, so we could have actually taken an entry position here, to be honest with you guys, if we really wanted to. However, I decided not to, simply because I wanted more confirmation, right? So my, how should I put this? Because I don't want to give too much information. Essentially, I was looking for the confirmation that I wanted to see take place was going to be this specific high being taken out, right? Now, I choose this high. If you're a student of mine, you understand why I'm choosing this high here. It's not just because it's a doji candle, but there are other confluences that caused me to choose this area as my swing structure that I would like to see broken, especially when it comes to trading Bitcoin. So we're just essentially looking for this supply here to be taken out and for this structure piece here to also be taken out. So we see the price pushes to the downside here. We have a lower low, then we have a lower high, then we have another lower low. This was an excellent entry opportunity for some of my students who don't mind being a little risky, right? And as you guys can see, this was spot on. Price starts to push to the upside. So then we push to the upside from here, right? We create this higher high, right? Taking out internal structure here, create this higher low, okay? We push to the upside. We have a little bit of accumulation here. We have a sweep and then this nice push to the upside here, right? After our sweep takes place, then we have the real move. Remember, you always want to trade opposite of the sweep of liquidity. Now, if you don't understand why this is a sweep of liquidity, feel free to check out some of my previous content on liquidity and things like that. I don't do too much teaching on this YouTube channel anymore. However, I do use it as a trading journal for you guys to continue to take advantage of and understand. This type of stuff takes place in the market all the time and it's not going to stop, literally. Anyways, so we have this point of interest that was taken out. So my job is to now find my points of interest for entries, right? My first point of interest for an entry was here. Okay, raised 1% on this trade. As you guys can see, price took us out. After we gave a little reaction, price took us out with this nice move to the downside. My second point of interest was this region here, okay? This is an inside bar. Yeah, I have no idea why my inside bar color is not showing up, but we can just do it by hand. You guys can see here that this middle candle, okay, where my vertical line is, this middle candle essentially trades in between the range of this previous candle, which is here. So this is an inside bar. Just understanding the rules that go around inside bars and things like that. Okay, we know that there was some type of supply or demand to come into the market within that range of this candle here on the M1 time frame. Right now, a lot of you guys ask me, Mac, you know, do your eyes naturally get trained to see inside bars and things like that, and how long does it take? So the answer to that question is yes, your eyes will get trained to see inside bars. It does take time to do it, but just like how I know this candle right here is supposed to be highlighted as an inside bar, okay, because it trades within the range and how I was able to spot it out. You guys are going to be able to do the same types of things once you have the information within the mentorship program and within the institutional trading courses, all right? So price trades into this region here. I risked around 300 pips on this trade, which doesn't really matter because it's just 1% of my trading account. And the target was based on, oops, let's put that back. And the target was based on the higher time frame, being this supply right here that we can see price taps into. So this was about, so I risked around 300 pips for about 11,997 pips. All right, and that was about a 39.99% return on investment. I did close 1% of my trade when I was up a certain percentage, but with cryptocurrency, honestly, guys, you guys should just let it hit the targets. Get into the habit of allowing your crypto trade to hit higher time frame targets and things like that. I really don't day trade cryptocurrency too much. I just have certain price levels, that I want to see price hit, and that's what I'm going to target. So with that being said, this was a 39.99 R trade. Absolutely phenomenal, absolutely beautiful. Were we able to catch the entire 39.99%? Absolutely not, because we closed 1R. So this ended up being about maybe a 38% trade, 37% trade when you exclude all commissions, swaps, things like that. All right, but it was very, very straightforward. A lot of you guys do ask me, Mac, how are you guys able to produce these same types of trades over and over and over again? Guys, it's literally just applying rules, to my theory, right? It took a day and 14 hours to hit this target. So it's literally just about applying rules that come from a theory. And the theory has been tested out over and over and over again. As you guys can see, I don't trade like regular smart money concept traders or regular supply and demand traders. All of that goes out the window. Smart money concepts, last touch, the accumulation, the distribution. Yes, it's great to know that information, but you don't necessarily need to follow all of those guidelines, all of those rules. My trading process is 3 steps on one time frame, 3 steps on another time frame. That's it. And that's why we're able to catch these trades, because we don't allow our mind and our thinking and our psychology to get in the way of us actually applying our theory. Why? Because it's easy and straightforward, and you could definitely take advantage. So if you would like to take advantage, feel free to join the Day Trading Masterclass or join the mentorship program if you cannot yet afford the Day Trading Masterclass. But definitely join the mentorship program if you're looking to increase the amount of income in order to join our next masterclass. Right now, it hasn't been a fair shot for you guys to join the masterclass because all of my students have been joining it, so they're pretty much taking up all the tickets. So I will be doing a masterclass for those of you who aren't students pretty soon here. Now I understand the type of results that my students are able to produce, but maybe we will lower the price on our next masterclass because, like I said, I'm not quite sure about your specific way of trading and how much money you're able to bring in. So we'll keep that in mind next time we do another masterclass, whenever we do it next time. However, this first masterclass, you guys are in for a treat. We're going to be giving away a funded account, as well as we're going to be giving away everyone a part of the masterclass an entire checkbook. Right, it's like a 50-page PDF if I'm being honest, but it's entire checklist, as well as explanations on what I'm looking for, as well as some small examples and things like that on what you want to see, how you want to see it take place, what time of day, so you guys can have the confidence to apply this information to your actual charts. Anyways, with that being said, this is your boy Mac. I'm going to go ahead and get out of here. If you guys have any questions, feel free to drop them down in the comments below. I would love to answer your questions, as well as subscribe to the YouTube family if you are not a part of the family. All right. With that being said, I'll catch you guys on the next one. Peace out.